Greetings from One Local Board. Happy Hump Day to you guys. May 18th, 2011, Wednesday morning here. Third day of the week. Now, boy, Wednesdays, we talked about this morning, but Wednesdays always mean what? Crude inventories. Now, boy, we talked about this today. We had a triple threat this morning, right? Kind of that trifecta of red flags this morning. What do we see? Well, we had crude inventories at 10:30 this morning. That's one thing we know the markets are looking for. Now, see, Wednesdays are very unique for us because we're crude oil traders, and there aren't many news events out there that directly apply to one market. You've got nat gas, right? You've got crude oil inventories. I think those are the only two, right? Maybe you can help me. If you can think of a news event that's directly tied to one market, let me know. I can't think of anything right now. Post that on the blog right below this video right now. Let me know. Can you think of anything? I can't think of any other news events besides nat gas and crude oil that are directly correlated to one market, right? Think about that. So this morning we knew Wednesday mornings are always the same. Wednesday mornings, three phases of crude oil, right? The pre-news, the during news, and after the news. Now, if you're on our blog right now, search the blog for 3 phases of crude oil, and you'll see a video we did on this. You can learn all about those 3 phases of crude oil. We also talked about this morning in our morning prep. So that was the first red flag. The second one was we had news at 2 o'clock this afternoon. Now, 2 o'clock news shouldn't be that big of a deal, right? Unless, of course, it's the Fed meeting minutes. Now, remember Fed Day last week, 2 weeks ago, right? With the Federal Open Market Committee, they release, right, their interest rates, their monetary policies, and then all the notes they took during that 2-day meeting was released today at 2 o'clock. So here we are. Wednesday morning, I knew I had 10:30 inventories. I also knew 2 o'clock news meant people are probably going to be sitting on hands waiting for that 2 o'clock news. And then what was the third one? What was the third trifecta? Dollar wedge. Remember that? Dollar in a narrow wedge. And not just any wedge, but a low volume, sloppy wedge pattern this morning. So we had 3 red flags right away. Crude inventories at 10:30, 2 o'clock news, which made us think this might be a slow, sloppy day, and it really was. It was a pretty challenging day. And then we saw, the slam dunk red flag was the dollar channel. I'm sorry, dollar wedge, right? Channels would be great. I love a dollar channel this morning. We had a wedge. So 3 things going against us we knew this morning might be a challenge. So, as we always do, we don't get intimidated by potentially tough days. We follow our plan. So at 7:45, what happened? Well, 7:45 this morning, very sloppy, right? We were sharing volume on crude oil. That was another thing we're looking this morning. Crude oil was low volume because of contract rollover. Now, we didn't roll over today, but we'll be rolling over tomorrow. I can almost guarantee you that. But in between, you've got the volume, half the volume on 611, half the volume on 711. And so we call that sharing volume on the crude oil. During these times, it doesn't happen very often for the E-minis or the currencies, but crude and gold, they will share that volume. And on those days around contract rollover, you'll see they'll get pretty sloppy out there. Very, very sloppy at 7:45 this morning, and we've gone over now 4 reasons why. Gold didn't move an inch. In fact, we were wondering, right? I almost cleaned off my monitor here to see, is that really that slow right now? It was literally sitting there going nowhere on gold today. Now we had to assume obviously that, remember, gold directly tied to the dollar. Dollar not going anywhere this morning because people are undoubtedly waiting for 2 o'clock news. Remember, 2 weeks ago we had that brand new Fed format. 2 weeks later they're publishing their meeting minutes, all the notes they took during that meeting. I can assume people are waiting for it. So we had reason to be concerned. But then we got some great clues. And it was great because this morning was a good example. We're sitting there at 7:45, 8:45, 9:45. Nothing's moving. And all of a sudden, what do we see? Hey, look at that. Is that a channel on crude? Hey, that's some good news, right? We were worried we may not see anything today. And then we said, wait a second. Dollar's going sideways, so let's use the highs and the lows. And then we got the third clue. We saw new higher highs on crude, and that was what put that nail in the coffin. We said, all right, now we know what's going on. 7:45, 8:45, 9:45, nothing's moving, no personality, no nada. And we're wondering, did I miss something, right? Is this April Fool's? What's going on here? We had some reason to believe it'd be slow, but it's very slow. Then we see, wait a second, there's a channel. I've got a price channel. Now that gives me a clue. A price channel says buy pullbacks, right? Buy the lows, sell the highs. It gives me something to wrap my arms around now. There's one clue. A nice bull channel on crude. Until I break that channel, I'm buying pullbacks. But then we noticed there's no dollar bias. Now we had a dollar wedge, believe me, right? That's higher risk. I know that for a fact. But we always try to find the dollar bias. And what I mean by that is the dollar trending up, right? That would be a short bias on crude, negative correlation. Okay, search the blog, dollar index correlation. You'll learn all about the correlation. And so we said, okay, if we had a trending dollar, there would be a bias, which means I would want to trade in one direction. This morning, the dollar did not give us a bias. So ultimately, what that told me was, be using that bull channel on crude until the dollar shows me direction, of course, in this case, higher. So we said this morning, use that crude oil bull channel, use that to buy pullbacks, use that as your clue for rising prices. And because we don't have a clear sign of a bias in the dollar, we're free to go either way we want. Buy the lows, sell the highs. We got a nice heads up though. We got a nice easy dollar came up, the highs dropped late in the morning. That really helped us out. So we used the highs and the lows of the dollar, if you guys recall, to trade around those. Then, now that we know we have that bull channel, now that we know we can trade in any direction, we had to wait for, right, that something to happen. We got to wait for that breakout, that breakdown, right? We got to wait for something now to happen. Give me some sort of confidence. Tell me something. And here at 9:50, what do we get? New higher highs. Boom. Right through the right through the high of day. High of day, new higher highs. I'm now ready to follow my plan. But before I follow my plan, I'm reading tape. Now remember, what am I always looking for at the highs? Whenever, I'll tell you right now, whenever, every single time, every time, there is no situation ever, where we test the highs and I'm not looking to sell first. Right away, at 9:50, prove it to me, crude. Prove it to me. You've given me nothing from 7:45, 8:45, 9:45. The first thing you do is test the highs. I'm selling those highs. Or at least I'm going to try, because I expect price tried as hard as it could to get up, and it's going to just curl over and come back down. That's what usually happens when you're that slow and sloppy throughout the morning. So we hadn't seen any reason to think we're going to get that big explosion. We get new higher highs, and I look to sell. This is where we got the third clue. And the third clue told us, let's get that music turned on, right? Get the dancing going. We already had the bull channel. We already knew. Give me some feedback. Prove it to me, crude. You're really going to move here. New higher highs, sellers fail. I see no big money sellers. I got my finger on the trigger. Give me a reason to sell. No reason to sell. And I say, really? Interesting. Bull channel. Dollar now. What were we seeing? Remember that? Dollar was now dropping. We were in the middle of the dollar wedge, but the dollar was dropping. Little bit, right? Little bit of a help. Not much, obviously. Dollar dropping in the middle of a wedge, but a little bit of a help. It definitely didn't tell us not to get long, that's for sure. Dollar drops, we see sellers fail. That was the sign. And then we used the bull channel and the dollar range as other compensating factors to say, all right, let's go. New higher highs, buy pullbacks using that strong bull channel. Don't worry about a dollar bias until it gives us one. And we saw those sellers fail, which means I'm now going to try, when I see buyers, buying pullbacks. So here we are. I'm going to break up. Now again, I'm thinking sell first, so I've got to first disqualify the short first. I'm going to buy a pullback 1. It's going to get me in, bounce me out. I'm going to buy a pullback 2. Took 2 trades here. So of course the first one here, 953, wave pattern long, got my 10, my 22 plus 7 is 29. So I begin my day here at 9:53. I make 29 ticks. Again, sellers fail, new higher highs, and I'm buying pullbacks. I am following my plan.